Work on this committee with my colleague, the ranking member, Senator Kim. This has been a great start to our what I hope will be a great collaboration. And I want to say a special thank you to our witnesses who are in the room. We'll have a chance to hear from each of you in just a moment. I'm going to introduce each of you, give you the opportunity to make an opening statement, and then we'll have some rounds of questioning. Before we start that, let me just say a word about what brings us here and the significance of this hearing. In the last year alone, disasters have devastated communities across our country. In the state of Missouri, where I'm from, tornadoes have ripped across the state, leaving thousands without power, leaving homes damaged, in some cases leaving families without loved ones. Hurricanes Milton and Helene have cut a brutal path through the southeast, uprooting trees, destroying roofs, turning family lives into a nightmare. On the other end of the country in California, brutal wildfires have burned entire communities to the ground. And these disasters have done more than cause property damage, though that is quite significant. They have done more than cause inconvenience, though that can be harrowing. They have destroyed the lives of people. We're not talking here about minor inconveniences. We're talking about moms who've had to haul 5-gallon buckets of water because the pipes are gone. We're talking about grandparents who've had to sleep in their cars because there's no roof over their heads. We're talking about families who are maxing out their credit cards because their insurance companies won't pay out any damage claims. And that's what brings us to today's hearing. Where do Americans turn after catastrophes like the ones we've experienced just in the last calendar year? The answer is they turn to their insurance companies. And they don't turn to their insurance companies for a handout. This isn't charity that we're talking about. They turn to their insurance companies because they pay premiums to those insurance companies. It's a contract. And by the way, it's required in law. Americans are required to purchase. Property owners are required to purchase insurance. And so they do so dutifully in every state in the union, and they pay their premiums dutifully in every state in the union. And unfortunately, time after time, they find when disaster strikes in their moment of utmost need, the insurance companies come back to them and they delay and they deny and they offer excuses and they send out 2 adjusters and 3 adjusters and 15 adjusters and 25 adjusters, and they constantly change the estimates. And at the end of the day, they just won't pay what is due, what is required, what is just. And it's not a one-off situation. It's not like it's happened to just one family. It is a deliberate strategy to maximize profits. We're going to hear about it today. We're going to hear about it on this panel. Let me just give a brief overview of how it works. It goes something basically like this. When a disaster destroys, let's say, your home, the insurance companies send out an adjuster, often a third-party adjuster. That person writes up a report, often in good faith, doing their best to estimate the damages. And then what happens? Then the insurance company intervenes. Then the insurance company says, you need to change the facts that you found. You need to change your estimates. You need to change what's in the report, and they adjust arbitrarily the award down, 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 down. And the policyholder never knows. And the policyholder gets no say in the process. And the policyholder is left to try and put back together her life as these insurance companies make billions and billions of dollars in profits. We're going to hear about it for the witnesses who are here today. And I will just say that even before today's hearing, committee staff, my staff, working with Senator Kim, has done a thorough investigation that we will continue. We will be submitting into the record evidence today that we have gathered that will corroborate the testimony that you are about to hear. This is a system that we're talking about here. This is a system that promises homeowners that they are in good hands, that they will watch over them like a good neighbor. And after billions and billions of dollars in premiums are collected and pocketed by these insurance companies, the people who are left holding the bag are the policyholders, American citizens, at their moment of maximum despair. There's something wrong with that system. There needs to be some accountability, and we're going to do our best to start getting it today. The practice of the subcommittee to swear in witnesses who testify in front of us. So now I'll ask you to rise and raise your right hands and repeat this oath if you're willing. Do you swear that the testimony that you will give today is the truth, the whole truth, and nothing but the truth, so help you God? Let the record reflect that each witness answered in the affirmative. That's a good start. And with this, let me go down the line here and introduce each witness and then give each of you the opportunity for an open. It's Mr. Vitale. Thanks to all of the witnesses. We'll now have...
When Americans buy insurance, they are not just buying a document or a policy number. They are buying a promise that when life collapses, when disaster hits, when everything they worked for is destroyed, the company they trusted will step in and help them rebuild. But what the Senate hearing chaired by Josh Hawley revealed is that for millions of Americans, this promise exists only on paper and not in reality. Because behind the scenes, a very different system is operating. A system driven not by protection but by profit. And this system came into public view only because victims, whistleblowers, and internal employees finally spoke under oath. The story begins after a wave of devastating natural disasters across the United States. Hurricanes, storms, floods, and extreme weather events that left entire neighborhoods destroyed, families displaced, and lives turned upside down. And as expected, people filed insurance claims believing this was the moment their years of premium payments would finally matter. But instead of quick help, many were met with silence, delays, confusing paperwork, and shockingly low settlement offers that did not even come close to covering the damage. And as these complaints multiplied, Senator Josh Hawley began to notice a pattern that went far beyond isolated mistakes. Hawley called a Senate hearing and summoned some of the biggest insurance companies in America: State Farm, Allstate, Nationwide, Liberty Mutual, Travelers, and American Family Insurance, companies that insure tens of millions of Americans and generate billions of dollars in revenue every year. And from the very beginning, Hawley made it clear that this hearing was not symbolic. He accused these corporations of systematically ripping off policyholders by delaying claims, underestimating damage, and pressuring victims into accepting far less than what their policies promised. As the hearing unfolded, policyholders began to testify, and their stories were devastatingly similar. One homeowner explained how a powerful storm destroyed their roof, soaked their walls, and compromised the structure of their home. Independent experts estimated repair costs at over $400,000, but the insurance company offered only $46,000, an amount that could not even begin to fix the damage. Another family described living in an uninhabitable home for months while their insurer repeatedly asked for more documents, more inspections, more time. And during this delay, the family burned through savings, borrowed money, and watched their lives fall apart. What shocked lawmakers was not just the suffering, but the consistency. Different states, different disasters, different companies, yet the same result every time: low initial offers, long delays, repeated requests, and eventual exhaustion of the policyholder. And Hawley pointed out that when a pattern repeats itself across the entire industry, it stops being coincidence and starts looking like design. Then came the moment that changed everything. Insurance adjusters themselves testified. These are the professionals responsible for inspecting damage and calculating claim amounts. And under oath, they revealed that accuracy was not the goal inside these companies. They explained that when they submitted honest estimates showing the true cost of repairs, their reports were often rejected, sent back, or altered by supervisors. They were instructed to reduce numbers, reclassify storm damage as wear and tear, or label structural damage as pre-existing problems. And when adjusters refused to comply, they faced retaliation, reassignment, or pressure to quit. One adjuster stated plainly that the goal was cost control, not fairness. Another testified that decisions about payouts were often made before inspections were even completed. And this testimony revealed something deeply troubling: that the outcome of many claims may be determined by corporate policy rather than actual damage. The reason this happens lies in how the insurance business works. Insurance companies collect premiums from millions of customers and invest that money Their profits depend on paying out less than they collect. And as natural disasters increase, payouts threaten those profits. So instead of denying claims outright, first, it must be said honestly that not every insurance claim in America is mishandled. Millions of claims are processed correctly every year, and insurance companies are not automatically guilty just because someone is unhappy. But what this Senate hearing revealed was not a collection of random mistakes. It revealed a repeated and consistent pattern. And when the same complaints appear across different states, after different disasters involving different companies, it stops being coincidence and starts looking like a system. If the insurance companies were truly operating fairly, the testimony from policyholders would have been only emotional, but it was not. It was supported by documents, independent estimates, timelines, and most importantly by testimony from inside the system itself. Insurance adjusters, the very people responsible for evaluating damage. And when insiders testify under oath that they were pressured to lower estimates, reclassify damage, and delay payouts, this is no longer a matter of opinion. It becomes a question of integrity. The next question is whether the companies did this intentionally. And while no executive stood up and admitted wrongdoing, the structure of the system itself provides the answer. Insurers have built a process that relies on delay, confusion, and exhaustion, not by denying claims outright, but by wearing people down, offering low settlements, asking for repeated inspections, and forcing policyholders into long waiting periods, knowing that most people do not have the time, money, or energy to fight back. This does not mean insurance companies are charities. They are businesses, but there is a clear moral and legal line between running a business and breaking a contract. When companies collect premiums for years and then search for ways to avoid paying when disaster strikes, that line has been crossed, and this is why Senator Hawley's criticism carries weight. At the same time, the company's defense cannot be dismissed entirely. Extreme weather has made claims more complex, fraud does exist, and not every dispute is evidence of corruption. But none of these explanations justify pressuring adjusters to alter reports or systematically delaying rightful payments. And this is where the insurer's argument begins to collapse. The greatest wrong in this entire story is not a single low payout or a single delay. It is the imbalance of power corporations have. Lawyers, experts, and unlimited time. While policyholders have damaged homes, displaced families, and rising fear, and when a system consistently favors the powerful over the vulnerable, it cannot be called fair. So what is the final truth? The truth is that policyholders were largely right. Insurance companies were not entirely honest, and the system itself allowed this behavior to continue unchecked. The hearing did not prove that every insurer is corrupt, but it did prove that the industry operates with incentives that reward denial and delay rather than fairness and speed. Now the future stands at a crossroads. One path leads to minor apologies, quiet settlements, and a return to business as usual. The other leads to stricter laws, clear timelines, penalties for manipulation, and real accountability. And Senator Hawley made it clear which path he intends to push for. If meaningful reform does not happen, the greatest danger will not be rising premiums. It will be the collapse of trust, because insurance only works if people believe the promise will be honored. And once that belief is broken, the system itself begins to fail. So the final conclusion is this: insurance is not just a financial product. It is a promise of protection. And when that promise is weakened or quietly broken, the damage goes far beyond money. It damages faith, stability, and confidence in the system meant to protect people when they need it most, and that is the real warning this hearing delivered.